I had breakfast just after the launch of our new investment trust on London Stock Exchange and the Social Stock Exchange with one of our shareholders, Stelios Hajianu, founder of EasyJet. And he said to me, well, of course, EasyJet's an impact business because we make it possible for low-income families to take holidays where perhaps that wasn't possible previously. And in a way, that's a fair point. And so much of positive impact, as indeed negative impact, is subjective. But fortunately, when it comes to environmental impact, it's become much easier to measure. And in fact, when it comes to positive environmental impact, we live in a time and an era when, perhaps for the first time ever, creating positive impact can happen whilst also making as much money as possible and making more money than everyone else. Because we're going through a green industrial revolution, which is plain to see. We had Ian Cheshire, my chairman, speaking earlier. Stuart Rose is another shareholder in our vehicle. These were the first two FTSE 100 chief executives to launch serious sustainability programs within their businesses. And it wasn't necessarily about doing good. It was about saving money and about being better businesses. And it was largely about investing in efficiency, picking up $100 bills off the factory floor or off the shop floor. And businesses like that across industrial sectors have started looking for ways to use energy and water and raw materials and their own waste streams much more efficiently. So that's unleashed a whole set of new markets which really didn't exist 5, 10, 15 years ago. LED lighting. Who'd even heard of LED lighting outside of a laboratory a decade ago? It's now the dominant form of lighting across all applications. Waste to energy, waste recycling, energy smart metering, the whole array of smart grid technologies, water desalination, water efficiency, even the electrification of transport, which we were told is a generation or two away, is upon us pretty imminently. So all of these markets are growing much faster than everyone expects and represent, in my view, a tremendously exciting investment opportunity. And that's what I've focused my career on. I began by co-founding Web, and some of the Web asset management people are here, and you're going to hear from Seb Bilo later. Web runs a series of private equity funds investing at the innovation end of the spectrum and a listed equity fund at the publicly traded mid and large cap global equity end of the spectrum. But what I wanted to do in the last couple of years is launch a vehicle that could do all of the above. My direct experience of investment has come through my family's investment vehicle, where I've been chairman since 2007, and which really has no constraints at all. It's patient capital, be pretty opportunistic. We have an asset allocation matrix which can evolve according to how we see the world. And I wanted to try and replicate that in the form of a publicly traded investment trust, which would have a similarly patient capital approach, opportunistic approach, no particular asset allocation plan, and which would be able to add value to the investments in which it was getting involved. And so I brought to the two stock exchanges that I mentioned, Menhaden Capital in the end of July, and we are able to invest across publicly traded equity and credit. In fact, we've done both. We're able to invest in private companies, private assets, and part of our model really is to work with great people. We've got Ian, who's a corporate champion and a sustainability champion as our chairman, and we've got Howard Pearce, who's top performing public sector pension fund manager over many years, former manager of the Environment Agency Pension Fund on our board. We have Emma Howard-Boyd, who's a champion of sustainable investing. Duncan Barger, who's in investment trusts, Supremo, been with RIT, Rothschild Investment Trust, for many years. On our board, we have a great advisory board, Chad Pike from Blackstone, Mickey Brewer-Weil, Constantine Papadimitriou, and we've got a great set of shareholders, and we're working with those shareholders now, analysing public and private deals. We've worked with Chris Hahn of the Children's Investment Fund on one distressed credit situation. We're working on deals with KKR and Blackstone on the private side, where we will be minnows to their behemoths, but we hope to be able to add value, and we're certainly working alongside those guys. And so our aim is really to try and work with opportunities alongside the smartest management teams, the smartest co-investors, and to build a really big and established and long-lived financing institution focused on this green industrial revolution.